What time is it?
Pasa pasa,
Time?
pasa pasa.
Time? Every girl. I go me a
Pasa pasa.
stop, girl, why not drink and feel like drink and rave till the morning light, my girl. Center. Have a shot, man.
Hey guys, welcome back to the podcast. Or if this is your first time, just welcome. As always, we are grateful that you've decided to join us and hope you and your family are doing well. You are in for a treat today. I hope you have something to take notes because you will need it. I do have my paper, my pen, because I'm not playing any games today. I'm not playing any games today. Listen.
Not a game.
Not a game today. The freeness that is coming, the amazingness that is coming, you are not prepared. So if you do not have something to take notes, you better go get it right now.
Pause the video.
Pause the video, pause the podcast, pause everything, go grab it. But before I get into that, let's do a roll call really quickly for our listening audience. So let's start with Soph.
I'm here.
Great. Shar.
Here, guys.
Hey, Kara.
Hey.
Okay, so for the first time this year, and this year being 2021, we have guests joining us on the podcast. We enjoyed adding additional perspectives and insights last year, earlier in the season, and thought as we are in an all-important tax season that we should invite some finance experts. So if you're watching the episode on YouTube, that will explain the additional faces that you see. So let me do some introductions. So today we are privileged to have join us from Heinz Keys and Associates, Simone and Celia. Did I pronounce that right, guys?
Sure did.
Yes, you did, ma'am.
Awesome. Okay, so Simone, wave Simone so everybody know which one is Simone. Yeah. Simone is a past student of the St. Andrew High School.
Come on, guys.
I had to say it this time. Every time I say it, I have to say it again. The St. Andrew High School for girls. Graduating class of 98, whoop, whoop. Anyway, sorry. She has been a practicing CPA after earning her bachelor's and master's in accounting. And her passion for accounting has also allowed her to coach and develop future CPAs as an accounting professor. I don't know how she finds the time to do all that, especially since she is the mom of 2 boys. Now I have 2 children. Child, that just gave me like indigestion. Just thinking about all the things that you are taking on. Listen, not a game. Celia, wave for everybody so everybody knows who you are. Yes. She is a past student of Mount Alvernia High and Knox Community College in Jamaica. When she moved here, she lived in the Northeast for a while before settling in warmer Florida. That's where you are, right?
Absolutely.
Listen, it's warm in Texas.
I wouldn't have it any other way.
I feel you. So like Simone, Celia is a teacher, she's an entrepreneur, and she is the wife and mother of 2 beautiful girls. They started their accounting firm to help CEOs improve or develop their business and tax strategies through outsourced accounting and payroll operations. Essentially, they are here to help us with all things finance, especially as I said, we are in tax season. So I hope you guys are ready. So yeah, I guess let's jump right into it. Actually, I said I was gonna do this. I don't know if everybody is aware that we record these outside of our regular working life, outside of our side hustles that we normally have, and we squeeze the podcast in and try to give you guys content as it comes up that's beneficial to you. So I think all of us today, and I don't know if Simone and Celia are having this, but this is just one of these days where everything is going wrong and we still were able to manage to bring 6 busy people together, and I still don't know how we were able to pull it off. So I'm appreciative that everybody is smiling right now, but I wanted to just give everybody a like 6-second moment to inhale and exhale. Like literally, just take a moment. if if this is your moment of wellness, if you're listening, this is your moment of wellness. I would say take this moment. If you haven't already, subscribe to the podcast. Go get your paper and pen, get ready to dive into our episode. But I just wanted to give the ladies a chance to literally breathe because it has been a long day.
We rolled on up in here.
Very
2 steps from our
literally.
front door.
And it's not over. Can we just add that?
No, seriously, it's not a game.
Not over.
Not a game. Yeah,
All
real
right.
life, real life. Appreciate that, Mish.
Whew. Okay, so we have discussed the trials of 2020 a lot on the past episodes, and honestly, if you're anything like us, you're just trying to forget about it, bury it, move on, and grow. But one lingering ghost from last year is our 2020 taxes. So let's just tackle this and try to keep as much of our money in our pockets instead of giving it to Uncle Sam in my world. So let's just start with some baseline questions. And I think, ladies, feel free to jump in at any point. I think I would love for them, Celia and Simone, to give us as much information. I'm going to try to take it in as much as possible. But if you guys have any questions, jump in, or if you have any information that you've heard and you want to clarify, jump in also. But let's start with some baseline. I figure let's start with something easy. What are the main things that you think we need to know for the 2021 tax season, especially for small business owners?
Well, so small business owners, they are in a period where, you know, revenues have gone down as a result of COVID and all of that stuff. So everybody, I'm assuming everybody has heard about PPP, payroll protection, the payroll protection program. So that's something that's available to small business owners. And, you know, it's money that the government is allowing or providing, I should say, to small business owners if you meet certain criteria, of course, that is designed to basically help you pay expenses that because you've had a downturn in your revenues, that maybe you're having problem paying your mortgage interest, your utilities, and even your payroll itself. That money can come in and, you know, be a benefit, right? And the good thing about it is that the expenses that you pay for it from a business return perspective, they are deductible, right? Nice. So the IRS is not penalizing you for having received this government money. They're allowing you to actually deduct the expenses that you use the PPP money to pay for, all right, from your business revenues, which in turn will lower your net profit and lower whatever taxes you would have paid on that. All right, so that's one tidbit. Simone?
I would piggyback on that for sure. So like, I would even go back as to say, okay, like who is a small business owner, right? So we had like, we had businesses who did really well during the COVID season, and my clients said, okay, they came out and they did really well. And then you have those who probably didn't even realize that they were small businesses. I think a lot of people being home realize that they have, you know, these side hustles and these opportunities that they really stepped their game up over the break and just having that time and monetized. And so are you considered a small business then too? Right. And, you know, and I think, you know, that for sure has happened. A lot of people have transitioned and they've earned income in different ways. And they may not have officially registered themselves as a small business, but they are considered a small business. So now you're looking at additional or other sources of income that you're probably not used to dealing with. And should you report this and okay, the government is now offering help to these entities, do I qualify as someone who just had a little hustle and made some money from it? So, you know, we just feel like in our professional opinion, you want to report those things, all right, because you're looking at showing that income, which will help you further down the road. And also putting that on your return will also mean that now you're eligible for these benefits that are out there, because one of the things they always want to see is the IRS is looking at, are you really a small business? Which means that you have to file what we call a Schedule C on your tax return. And so they're going to be looking at stuff like that. So I think
Can I interject 1 second?
Yeah.
All you need to be qualified as a small business is file a Schedule C.
no, you don't even have to register your fictitious name. As long as you're in business for profit or you're making money on the side, you're considered a small business. You're a sole
Who said
proprietor.
that? I didn't even know that. This is news right
You
now.
can operate
Wait,
under your
no,
name.
this
Yeah.
is really news for me because I braid here. I've been braiding here, but I've never filed for it because I figure it's just a hustle on the side. I can.
No, that's a Schedule C.
You have to do all these
You
things.
report,
Okay.
yeah, you report. And so just going back to that, right? We know that. So we talk about like, okay, couple years, you might want to buy a home or etc. You want to report this income, right? So that you can show it. If you go to the bank to get a loan, you're showing this income, even if it's just $1,000 a month or a year, it's still income. You want to report it. So
Let me ask this about the small business, right? Side hustle piece. One of the reasons I hear often, right, people don't want to claim as a small business is because you're getting paid cash for your services and it wasn't taxed at payment. Right. So are you now responsible to pay tax on that income if you claim it?
Thanks,
you are.
My question.
You are. And answer to that is
we're listening for the benefits, Sim. We're listening for the benefits.
No, listen, you gotta pay to play. That's it. You gotta pay to play.
100%. Yes.
You have to pay tax. Yes. You can. So what is the end result? What are you trying to achieve? Like for my clients who they don't have plans to buy a home right now, they're just, at a different stage in life. Their strategy right now is to save. Hey, do what you want. I'm not gonna say or day. However, for clients that are young and we're at the point where you're looking at possibly getting rental properties in the future as a wealth building strategy for yourself, you're gonna want to secure financing. And what they're gonna look at is, okay, where's your money coming from? So multiple sources of income that you are reporting. Yeah, you're gonna, as I said, pay to play. You're gonna have to pay the taxes on it, but what are you gonna get in the long run? All right. So it depends on where you are, what's the plan. Hence why, we talk about being a CPA. That's what we do. We talk to clients as they plan out these things to make sure that you're doing the right thing now for 4 or 5 years down the line, what the intent is. So I would say that's a big one for 2020. Definitely taking that side hustle or those side hustle funds and making sure that it's being reported so that you can reap the benefits of that.
One of, and the government is realizing or has realized that small businesses, whether it's a side hustle or not, that they need assistance. So the more you make it legit is the more you can take advantage of that stuff.
And if you put money into developing your business, you can also claim those deductibles, right? Can you claim some of those as deductibles? Right. So if you have to maintain a space or whatever for your small business, then that stuff counts, right? So
it's huge. Like, so we always say, having a small business is like one of the best wealth building strategies because, you often wonder like, how do rich folks end up paying almost nothing? Right? They have all these businesses and especially if you're in a tax bracket where you end up owing a lot. All right. Do you have other income where, you have these expenses that you can claim for your business, right? So you have your home office if you're using your home office deduction, your cell phone if you're calling clients every day, that's like $100 a month. So you have these expenses that you can take to reduce your taxable income. And then we could even get deeper into that without even segueing, but even if you go into like an S Corp, You can get your own health insurance for yourself from your business, because you're an employer of your own business, right? You can get like
your pension, your own 401k.
Y'all better write down their address.
business.
You guys might need to retain these
You
folks,
can
but anyway.
write that off. You can write that stuff off.
And you write it off under your business. Yeah. So
Because it's a business expense.
right?
Wow.
Are
there common things that you see people leave off of their deductions that you're like, why doesn't everybody know about this? Like, why do...
That's a good one, Celia.
Not really. If anything, I find that over the years, people want to write off more than they can back up.
Write off.
Right. So always in the back of my mind is, okay, so yeah, you want to see what you can get away with, but guess what? Be able to prove it.
Right.
Be able to prove it.
You can't say that you gave $10,000 in tithes to the church.
You can, if you can show the receipt from the church that says that.
The church give you a receipt, ma'am.
Yeah, that's it. That's it.
You'd be surprised. So many people I meet don't know what their tax preparer even puts on their tax return. They're like, "Oh yeah, I'm gonna just get back a little money, you know."
I might be one of them people.
I may be one of those people.
Oh, I am definitely one. I mean, she gives me a thing.
She gives me a copy and everything like she's supposed to.
Read it?
But I don't know if I look at it.
Do I ever
Don't
read
do that, guys.
I'm gonna be honest.
So here's the thing. So as much as the tax preparer does it for you, the onus is on you. You know, it's your ultimate responsibility.
Your responsibility too, if anything go wrong.
Yeah.
That's why we want to make sure. I mean, that's why you guys are here, first of all. I mean, honestly, I personally, everybody else in this group had a side hustle outside of me. And I always say to them, does child support count as a side hustle? I don't know, but it should, because I work really hard for that. So
wait, so I don't have a hustle, my girl.
Yes, you do. You have a side hustle, like tutoring. What are you talking about?
That's not a hustle.
What is that?
I get taxed like 55%. That's AdCom. Girl.
Anyway, before this podcast, I did not think about business, S-corp, any of these things. And then once we started this, I started looking at it from a business perspective. So, I mean, now, even though we aren't, like, this is, I don't want to say it's not a legitimate business, but even though we aren't like making money off of it, it still got me immersed into the area of looking at taxes and looking at how we can make it profitable, et cetera, et cetera. And that's when I realized that there's so many things that we miss, so many things that we don't think about.
Yeah.
And I am now curious, especially because when Trump was in office, there were so many things that were changing and so many things that were happening. And you go to the tax the person and they're like, well, you can't write off your clothes anymore because Trump is saying you can't do that anymore. I'm like, what? And so is there anything that's changing now that Biden's coming into office? There is a transition period right now. I think, I don't even know, with how things were done and how things are being done. Is there anything that we should be looking out for? Or is there anything of note that is changing that we should be aware of?
Lad Mish, I got like 4 questions in there. I'm like, oh, which one? They might answer. They're all so good. I'm like, oh
yeah.
One at a time.
Oh, I mean, okay, so let's start with, is there anything changing? Is there anything that of note that's changing that we should be aware of?
Well, so we're in 2020. So of course, with Biden now here, most of the effects would be filed in 2022, right? So, so it's, now we're gonna look at what do you need to factor in this year. So we have child tax credit, which is changing. So for those of you with kids, that's going up from 2 to 3 grand. I know, it's like $2,000 now, it's gonna be 3.
So if like maybe I need to go get another child.
You know.
Yeah. tax, I mean, you remember that Biden, had his campaign, pushing a lot of tax-related reform,
Right.
designed to help low-income and middle-income people survive more. So the child tax credit, right now you get $2,000, and hopefully they get that $3,000 down too. So you can, if you have children up to age 17, you can get that.
Yeah.
Yes.
Yeah. So that's one factor. He's also, I mean, from the personal perspective, he has the first-time home buyers credit. That's back.
Oh,
That sucks. I missed that when I bought my house. I wasn't allowed to. I was so upset.
Yeah.
wait, how much is the credit now?
Can I do it now?
No.
You're not a first-time home buyer again.
So silly.
So it's 15 grand. So it's up to 15 grand, which isn't bad.
15,
I feel like
that's a lot.
that was a good program for a lot of folks. I think it was very well, it boosted. And I mean, it's so expensive now. So, hey.
Understatement.
But that, we should get more information on rolling out. But I think mostly Biden has been focusing a lot on COVID and the small businesses. When all of the stuff that he campaigned on, a lot of it, the literature really has not come out as to, okay, what is his true plan? So a lot of the Trump era stuff is really still in place.
Right.
So even
That's what
from
I'm realizing.
2020, you're not going to see big things, but I will say things like, your mileage. A lot of folks don't track their mileage, and that's a big one. You get like 50 something cents per mile for, if you're going out to your clients, so forth. Well, we know that in 2020, that kind of shrink down with a lot of, that's been going on. Nobody put it on miles. But with stuff like that, if you're in a state that has state taxes, you can deduct that on the federal side. I think a lot of people tend to miss out on deductions like those. And also just, keeping track. If you have a side hustle, deductions that we tend to see, especially on the business side, I talk about the home office expense deduction. That's huge. A lot of folks don't take that. There's also the depreciation on your vehicle. That's a big one. When Trump came on board, one of the things that he wanted to do was to stimulate the auto industry, right? We know that like GM and Detroit and all that was a mess. So he had a tax credit wherein if you bought a new vehicle for your business, and I say this, it depends on the intent. It's not like the car has to be under your business name. If the intent is you bought the vehicle to be used in your business, you could fully depreciate that, right? So you're looking at like a $20,000 car or whatever the case may be.
Let me ask this one. Let's talk about this car because I think I'm very curious, and I think a lot of people are very curious about how you can, as you both mentioned earlier, right, really put the expense on the business because it's a business expense. If you're purchasing something like that, a car, do you have to purchase it within the business, or do you purchase it as, right, Jane Doe and claim it as business? You know what I mean? I think I get confused about that. That's a good question.
So if you purchased a car and you're using it for, like, say 50-50, business, personal,
right?
The mileage that you accumulate on that vehicle, part of that definitely should go to the business. Now, how to capture that? It's just like, you submit your mileage reports to the business, or even if you work for some, a private company, you would submit that mileage and you get paid on it, right? So you could do it in such a way that if you have a formal business, you're pretty much doing the same thing to your business. You're actually documenting that you have this mileage being used for business. Right. Of course, it's going to be not from the time you leave your house to wherever you have your business, but anything beyond that, going to talk with clients, whatever the case is, you definitely get to claim that.
Yeah, and it's the intent. It's not the name of you don't have to get it under the name of the business. The IRS is looking at the intent of the assets.
Okay.
The intent of the asset is to be used 50% for business, 50% personal, then we'll we'll split the expenses related to that way.
So you mean I can get the range and is a 50-50?
I'm done with you.
Okay, we just want to clarify. We just want.
So you think these people getting ranges
Y'all
and not having
remember
these
who the
ranges?
experts on this panel be? Wait, but I have a question though. If your business, I don't know, if your business is you have property and you have to do a lot of back and forth for that property, whether it's maintenance or upkeep and like all the related things, that's your business.
You keep track of those travel expenses. Absolutely. So if you have rental properties and you have to drive to and from there all the time to see what's going on, supervise stuff, you keep track of that, and that is part of running that property. Those expenses. I
have to find a way to divorce my accountant.
I hope the accountant doesn't listen to this.
No, sir.
She didn't
mean
it.
The technology at all.
She didn't mean it.
You keep track of that, and again, it's making sure that you have a very good idea as to how much miles you've been attributing to going and making sure that your property is good.
And if you're traveling.
Ladies, and that applies to whether the property is elsewhere. So if you have to fly to maintain that property.
Exactly.
Okay.
Like there's a whole other segment on ways to make your vacations tax deductible.
Mercy. No, we have to go do that one day.
Wait, guys, can we do the podcast from like, let's think. We had to go there.
Yeah, there are rules now. You got to have a few little client meetings here, and but you
have to.
Guys,
no, I legit travel to do things.
Yeah. Let me ask you a question. Do you think it's better to LLC your business? Again, like I said, I braid. I never even thought of it as a small business. It's just something I like to do. And I make a little, something doing it. But I never thought to LLC it and, make it a formal business. But now you're making me really think about this. What do you think is best? Should I, or should I what is best? Just something.
That's a good question. So the only thing the LLC is really going to give you is limited liability. It's not going to give you any major tax break. And I mean, Celia, let me know if you're, just from what I've seen, because what happens is LLC, which is a limited liability company, means you said you like to do hair, like, so say you jack up somebody and top and they're like, yo, mega
suing you.
Right? They can't touch your personal assets, right? They can only come after what's in the business. So that's why most folks will tend to want to definitely, incorporate themselves that way. As far as the tax benefit of an LLC, it's the same as an S Corp. We're putting it on your 1040, just as I don't want to talk technical, your tax return, right? We're putting it on your tax return as like a normal Schedule C business. There's not really a major perk tax-wise. I would say maybe it can be a little bit more aggressive with deduction, but not even. It's really going to be the same because it's going on the same forms. So it's really up to you at that point. I think where you really see the tax savings is when you get to the level of S Corp. And usually we recommend that you're making around 40 grand, 34, I would say even $30,000 and up within the business, and then set yourself up as an S Corp. It's just a lot more room at that level to take your tax deductions, because at that level you can put yourself on payroll. When your LLC, you can't do that, right? Your LLC is not, an owner of an LLC is not allowed to run payroll for themselves. So if the business made 100 grand, you're stuck with 100 grand extra on your tax return that you have to pay all these taxes.
Self-employment taxes on.
Self-employment taxes are high. If you go to S Corp and you made 100 grand, you could pay yourself 40 grand. You understand? And you could kind of, play a bit there. There's no more wiggle room there. And at that level, we could talk about putting your kids on payroll, as a tax strategy. Because at that level, you know, if they're helping you around the house, girl, you're doing here, they pass the Vaseline, that's
Pass the bread, whatever it is.
If you know her, if you know her.
Boil the water.
That your child is your assistant, right? Give them a reasonable salary, right?
Yeah.
Give them a reasonable salary, and you could save that towards, you know, something for them at a later date.
Yeah.
So as we're preparing for next year, we're going to think about doing that. But what about the people who have not done that? For example, if you look at Soph's face right now, she is like, I'm sorry, what? So for people who did not, they're still doing their side hustle. They have not transitioned their side hustle from side hustle to a quote unquote real business. It's still a real business, but a formal business. How should they be approaching Carrie will tell me not to ask two questions. Let's ask one question at a time. How can they approach this tax season differently than if they had a business? Like differently than if it was a...
I will actually, because I'm thinking of a question in my head, and I think it's the same question. I'm thinking about the folks that are doing a lot of the Instacart people, the Uber people, right? People like that who are working, but they're not considered employed by the company. So it's like a side hustle.
Right.
Like, how do you approach your taxes with that?
Right.
You know,
you have to go in prepared. You're right. A lot of folks might be getting income self-employed again because of what happened last year.
Right.
Self-employment taxes are 15.3% of your net income. So that's your take home. Yeah. So if Uber pays you 10 grand and your expenses are 5 and you have 5 left, you're going to pay 15% on that 5, right? So it's so we find that those folks in that area, real estate agents as well, fall in that category where they end up owing a lot of time. So I would say at this level, you want to be as diligent as possible with tracking your allowable expenses. That's it. You want to go in ready to your preparer, but at the same time, you don't want them to exaggerate. You know, you want to be as truthful as possible, but you want to go in ready. Okay, this is my mileage. Okay, my house is 2,000 square feet. I use 500 square feet of it for my office. Quarter of everything is going on this tax bill. So quarter of your mortgage, quarter of the
insurance,
the gas, the insurance, the real estate tax. Your
internet, everything.
You want to, right? So you get those deductions.
You don't say mortgage and taxes?
Yeah.
Because you're using part of your house for your business. So whatever, say your house is 2,000 square foot and you're using 500 of it for your office. Like you, Sophia, you look like you have a nice a home office there going, right?
I would like to remind Sophie, while I know we're thinking about Sophie, just remember about the presenting work that your spouse does.
Right.
Your husband.
The fact that y'all have both
he
have
has an office,
work offices
work,
at home.
and he works at home 100% on his thing.
On your utilities, whatever percentage that home office represents of your total home square footage, that percentage is then used to just apply. So even if your husband has to pay for Zoom and all that now to do his services or his presentations, that's part of that.
Also another biggie, professional development classes, those coaching, anything to that nature. I felt like a lot of people did that in 2020 in their time. Those Audible books classes that you're taking, so for those in there, you want to go in prepared.
Wait, before you go any further, since it's 2 business now, we can both add my square foot and his square feet together and say, well,
it has to be that's a very good question. It has to be the total combined. So when you file the return, let's say you have an office, it's really 500 square feet. You want to put $250 under your entity, $250 under his if you're using the same space. If you're not using the same space, then you'll put your space, so your 500 on yours, and if he has a little 200 square feet, you know, you put that on his return under his business, right? So that's how you do it, right? Because you're filing jointly, but you're gonna have multiple entities on the return.
Oh, okay, so we can separate the two businesses.
Yep.
So, like, I'm teaching from home. Does that consider a business?
Back up.
What is the intent to make money? Your intent is to make money. If your
No,
intent
but
is
that's my job though. Like, schools are shut down.
no, the work from home thing, no. That's you have to.
That was one of my questions also.
The work from home for employer, they're not doing that for.
That sucks because I use so much internet and light and not heat, AC.
Well, my employer quite clearly stated that these are the benefits relative to your wear and tear on your car, your commute, and all the other things. They were like, yes, ma'am.
It balances out.
That's what I need.
And they're like, and if you want to come in, we'll find a way.
We are not giving you this money, okay?
Yeah. That's a good one. Yeah, I mean, but you know, this year for us as tax preparers, I will say, you know, we know 2020 was an interesting year. We were talking about the fact that we're now seeing so much more than W-2s. We have unemployment compensation now and so much more. And again, a lot of these one-off jobs, the 1099s here and there. So folks are realizing too that, you know, they're just in a unique space this year when it comes to filing in a lot of ways. And so they might end up owing where they've never done that before, because if they've had that W-2 job, they've always had the taxes taken out and they're usually good at year end. So, you know, it's interesting to say the least. But,
yeah, that's rough. I actually didn't realize that you pay taxes on the unemployment benefits.
Yeah, you do.
Yeah.
I didn't realize that either.
Wow.
You know, they know, just like your stimulus is not really stimulating.
We need to talk
This
about
is my question. I was like, yes.
About that stimulus. Because I want to know how much of it they're going to make me pay back.
Yeah, I mean, so
it's supposedly not taxable.
That's what I keep hearing, but I'm hearing both stories. I'm hearing some people saying it's not going to be taxable, but then I'm hearing others saying, yeah, not
we
sure.
had a whole debate about that about that today. I think there's a criteria, and we're trying to research what the criteria is, because I've done returns and seen it be taken out. Reduction in the refund, where in Chile it's like it's not. So I think there's an income bracket that we've been we just had a whole discussion where like, okay, we need to call somebody about this today, because we've seen it both ways. But on the opposite side of that is folks who didn't get the money, they're getting it on their actual returns, right?
Yeah.
So
as a tax credit,
recovery rebate included. But I feel like there are folks out there who have outstanding issues with the IRS, whatever that criteria is, and they are not getting it. They're taking it. They're taking it.
So say if they owe taxes from years past, they may actually have it
reduce it, or you're at like maybe a certain income level. I think your income level has something to do with it. So let me see if I can answer that before we. But it's interesting. We love it. And even on that note, you know, this year I feel like we've been getting a lot of folks who are from Jamaica. You know, we're getting a lot of international folks who want to get compliance. But think of the stimulus money though, because you know, like it's like the money come and they're like, oh, I never found my tax, you know, so they never get it, and then they're like,
oh, just in case another pandemic comes.
Come true.
So I was just like, it's just a different dynamic this year.
Yeah. I've been trying to tell people to file taxes. Like they're like, I don't have the money, I'm not filing.
Yeah, and all of a sudden, everybody wants it.
But no, them come. All right. Well, they are.
So let me ask you, let me ask you both this for Simone and Celia. Now that you mentioned people are reaching out to you, my question is always, how do you find a good CPA? Because we want folks listening to ask the right questions, right?
Right.
To get a good CPA on their team, because it sounds like everybody needs you all on their financial team to make sure, right? So how do you find a good CPA?
That's such a very, very good question. I think in the vetting process, communication is important. So when we started our firm really on the base that, well, we never really saw a lot of CPAs who looked like us and who were in that space with us. I mean, we're in South Florida, and I think there was like one other Black firm.
Yeah, especially one that's run by women.
So, yeah, there's one other. So we were like, no, I think we can do this. But the biggest complaint that we get is lack of communication. So you want to always go in and not being able to just only seeing that person once a year, and then you don't see them again until next tax time. So you want to make your goals clear as to okay, the type of relationship that you really want to have with this. And I always recommend, like with our clients, we try to do quarterly at minimum.
Touch base.
So if there's something that needs to happen or change within the year to mitigate any tax issues later, it's on us, I feel, to catch it and say, okay, no, you're gonna buy a car, don't do this, wait till 2 month time, blah blah. This I got dash out somebody, like I have this.
Wait, y'all CPAs do that?
Well, this firm does that.
Right.
We, so the idea is to get on the forefront instead of waiting until you're slapped with this huge tax bill, and then there's really nothing we can do at that point, so I think that's extremely important for a lot of folks. So we pride ourselves in that. Another thing too is background is of course important. There are a lot of folks out there who say they can do taxes and they can't do taxes. Right? But also, it's not only just
There's
that.
a lot of people out there doing taxes and they're not even accountants.
They're not.
Exactly.
And they cannot represent you. If something happens with you and the IRS, like they can't call, them can't do not. It's like you're just stuck. You're on your own and you don't know what's on the return.
Right.
So I think that's extremely important. Do you have the qualifications if X should happen? So I am on the phone with the IRS multiple times a day if I have to, for my clients. So it's just that that's important. So background is also important as well. And not just from the tax side, you're growing your business. So you want somebody who's also very well-rounded, because taxes are just one aspect, right?
Right.
You have investing, right? You want to expand your portfolio.
Right.
And
a lot of people are dabbling. This was a question I was gonna ask before Carrie asked this, but you did mention it. A lot of people are dabbling in that aspect of finance right now. I don't think they realize that you not only move up in a tax bracket, but it affects like your taxes, like general, like they're like, oh, I'm just moving around. Do you have any insight into saying, listen, you need to be paying attention. This is not just, I'm going to go to Robinhood and move my money around and pray that I make $1 million today. It's also affecting once you do the taxes. Do you have any recommendations for saying, when you're doing it, this is what you should do, or pay attention to this?
I can't speak to that space. I can only tell you that, just don't sell it.
Yeah, because once
the moment you sell it,
that's it.
Just make sure you save 20% plus, right? Of whatever gain you might have, because it's stocks and anything in that realm is taxed at a whole different tax bracket. You could be in 12% tax bracket, but they're taxing that like 20%. So it throws a lot of people out the loop, and you sell anything, we just make $3,000 in a tax return, and then they're so excited and they're like,
right.
What? So I would say, hang on. I would even, you're even thinking of selling, I would talk to an accountant first too, because that's something that we might say, okay, you have rental properties, you have other types of passive income that you can offset with this income, so that you're not ending up giving half the money to the IRS, right? So, you know, do you wait? You want the market to be great, so you want to sell, but what else do I need to do throughout the year to mitigate that loss, or that, you know, that offset that gain, wherein at the end of the year, I'm not turning around and paying the IRS so much money, because, you know,
so
people owe people owe all the time.
So if you have any, you know, if you're into a rental property, and you know, with the economy being such where in some places, you know, you're not able to collect rent, you're gonna have a loss,
Right?
you know, and that's a passive loss that, you know, you can use to offset, you know, other passive income that you may have. But the good thing about at least capital gains, if you sell and you have a loss in or on what you sold, you get to claim some of that, up to that $3,000 a year. And so that kind of helps you as well.
So, you know, there are ways to, we can I don't want to get too technical.
Yeah.
Like, because, you know, it can get really deep. For folks, even with the rental properties, typically what happens is most folks have rental properties to have losses, because you're getting physical cash, or you might be earning, but from a tax perspective with depreciation and so forth on the property, most people show losses. Like, you know, we think about people like Donald Trump, who only paid $750, you know, he has a lot of properties, he's making money, but he's showing losses on these S corps or multiple entities that he's able to write off until he literally has nothing to pay. You know, so
did they finish auditing him yet?
Girl, I hear they about to. New York is about to get his they lost the last appeal, so he's about to release his financials, or he has to. They don't really have a choice, I don't think.
Laugh best.
That's a good one.
Can you file for a small business on, like, say, this year, and then not file again next year, and then file the following, and then not file, like keep taking a year off? Can you do that?
No. Once you start,
you have to continue, or once you stop, you have to just stop for good?
Well, if you're backtrack a bit. If you're a registered LLC, you have to file, right? But if you're an S corp, as a sole proprietor, if you have no small business income for that particular year, then there would be no trigger for us to report that on your return. Make sense? So, but if you're registered as a LLC, you have to file, even if it's like, it's called like a no activity. We just say, okay, you just had no activity. But you want to be.
What if you're a side hustle?
That's what I'm saying. For those where you're not physically registered, you're just hustling on the side earning. If you had no earnings on your side hustle that year, then, you know, it is what it is. Then we wouldn't have to put that on your return. So if you could have 10 grand this year, nothing in 2 years, and then the next 2 years you make some money, then
Oh, so you can do, I mean, not that you purposefully do every other year.
If you earn nothing,
don't make anything, they don't.
As long as you're not registered, right? If you're registered with your NPN, you have to file.
They like to penalize you if you don't file.
This may be a good year for me to try.
So do you guys, when you're looking for an accountant, find that if the accountant isn't asking you the questions of what's going on in your life, like what is happening? Because it sounds like I need to be telling my accountant exactly what's going on.
Yeah, you do.
Today. So if they're not asking these questions.
Like a therapist.
No, this is exactly what I was thinking.
Has been robbing, because I don't think I've ever had a sit down with an accountant. I just send them a tax paper and I get them back and I say thank you.
No, we need to know your goals, your aspirations.
All of those have some
your blood type.
There's a tax deduction now for that.
Okay.
No, like, you're making me really think about this. Like, really,
you know, so, you know, if you're getting married, if you're getting divorced,
don't worry. We will give you her website at the end. So if you can just go.
Legit.
If you have kids, if you had a baby this year.
You might need to divorce your
my sister does my taxes. I don't know if I can divorce my sister.
Oh, well, then, yeah.
Yes,
Oh,
you
okay.
can divorce your
You
sister.
can
What
just
you
step
saying?
away. Be like,
But you
it's
know
just a
what? She
separation.
knows everything about me, so I don't have
It's
to
a
tell her anything.
separation.
But you know, now you could, you know, have these more, you know, educated discussions with her. Okay, I want to deduct this, that, you know,
Right.
so it should be good, man. But we're here, so you know, you could always ping.
You
Okay.
need to send me your
Yeah.
your payroll because I have questions.
Listen, at the end of if you guys have questions, I think we want to invite you guys back. I know there are going to be a ton of questions. We wanted to touch on financial management, especially since we do want to encourage, we all come from the island where you return money. You send barrel. I've never sent a barrel in my life, but I know enough people that send barrel. You send money, you send things, and you have to like budget that out and figure it out. As you said, you guys help people to say, okay, these are my goals. How can I get there in the best way where Uncle Sam not getting my money, like the best way that I can squeeze out all of the money and keep as much as I can. So I'm sure at some point we're going to have additional questions. We're hoping you guys will join us in some capacity. We've been doing IG lives, and we may have a follow-up podcast with regard to just financial management. So if you guys have any questions out there in YouTube/podcast land, as Soph would call it, link us and let us know so that we can pass it on to them so that we can try to put some stuff together. But do you guys, I mean, we're trying to wrap up now. Do you guys have any last like niggling questions or any just takeaways that you want to encourage people to do? I guess let's start with our team and then we'll let the experts round us out. And anything, you guys? No.
What I have learned today. Go ahead, Soph.
No. I would just say, like, honestly, talk to your accountant. Spend time having a conversation.
Yeah.
I don't do what I've been doing for years, which is drop off my paperwork and pick them back up. Because I mean, at the end of the day, I really feel like I've lost a lot of money that I didn't have to lose if I had spent the time to explain and, you know, just talk it through. So that's something that I'm glad that you guys said. And plus, I've been doing here for years, and I've never thought of it as a small business. In my mind, I'm just hustling, you know?
Right.
It never crossed my mind because I was taught that if it's not LLC, then it's not a business.
Right.
But now you're telling me a whole new, you know, so now I have to go look into that. So I really thank you guys for sharing that information.
Go ahead,
I
Shar.
wanted to say thank you for just really quick pointing out that taxes isn't a one-time event, and it's actually a planning process, which I think is really important. I think a lot of folks, to Soph's point, I just learned this myself very recently because I had to learn this, that you do have to it's an everyday practice, actually, if you're really running a small business. Because if you're tracking miles, you better be tracking the miles every time you leave the house, right? If your home is your office type of thing.
Right.
I think that was a great reminder that taxes isn't just once a year before April 15th, let me go file this and get my money, but it's an ongoing process if you're getting some money, right?
And the other thing with that notion that you're supposed to get money back from the IRS, no, not necessarily. You can manage it in such a way that, yeah, you either end up paying a little bit or you pay back a little bit, because all the money that's sitting there, if you get back all this amount at the end of the year or by after April 15th, that's money that they've been sitting on for you.
Right.
Interest.
And you're not earning any interest on it.
You know?
Right.
So
it's a good point.
Char?
So Soph basically said in a nutshell what I was going to say, which is, I know a lot of times we see things as added expenses. So for example, having a qualified accountant as an added expense. And so it seems simpler to probably just go to the H&R Block or do what you can, and just do it the streamlined way, because yeah, you might get $1,000, right? So it's like no sweat off your brow. Right. But just like Simone mentioned, one little thing, and yeah, we're not, billionaires here. I don't like to say his name because I'm I'm real malicious that way. But we're not billionaires here, but they have figured out how to best build wealth. And I think it's something we should invest in as we talk about even tax. And we're going to talk about probably financial management. I really do hope. I'm so grateful for you ladies. Hope y'all will come back.
Yep.
And I even think about a lot of Jamaicans that do not even side hustle work, but they work in industries where they don't have like retirement funds, like whether they work in the service industry or whatever. Right. And just like how, you know, like, let's not just assume, because that's, I guess, what we've been doing. Let's not assume what the situation is. It's worth it. And I said it might be worth it. It's worth it to get some expert opinion, you know, to at least put you on a path and figure out how often you need to go back and if you can figure something out. But I think it would be worth it. So,
for sure.
Yeah, I completely agree. I want to add that as much as we also depend on you guys to be experts, I think to reiterate what everybody else kind of said, we need to be some kind of informed as to what's going on. I remember when I moved to Texas, that year, I was living in Jersey part of the year, moved to Texas, but was working in New York part of the year. So that was the only year I've ever owed. I never owed any other year, but there were a lot of factors that I never even thought about. So the company was like, we'll move you, we'll pay you, we'll do all these things, but didn't realize that I was going to be taxed in New York, which is New York state tax, tax in Jersey, Jersey state tax. Texas doesn't have state tax, but now it's federal and all these things. In addition to that, they add my moving bonus to my income. I'm like, okay, I'm getting all this free. And then my tax return came out and they were like, you owe. And I'm like, what is happening?
Just give out the whole bonus money right there.
Okay.
And bonuses get taxed higher.
Oh, yeah, they do. Like 40%, 50%, some crazy.
Wow.
It is crazy.
I didn't even know that.
So so I didn't realize any of that and it's not like I went to my accountant and said, hey, this is what's happening. Tell me how to.
Told you to let
no therapist.
Wait,
I don't think about those things.
What would you have told
get it as a reimbursement with a little something.
So
is the key.
Be semi-informed, do what these lovely ladies said to do, and communicate, especially when it comes to your money, because we're not trying to play with our money. This is 2021. We going where the money resides.
Where it resides. Send us the zip. We are there. Okay.
Wherever that is. And we gonna call these ladies because we gotta figure out how to vacation as a podcast and write it off. Okay,
we need that. Yeah,
we gonna figure it out. I'm gonna leave them with the last word and tell you. I'm gonna let them tell you where to go to find them, because y'all, I'm telling you, you need them. This is not a game. Y'all need them. So I'll leave the final word to you guys. What do you? Tell them where we can find you, etc.
Sure. Thank you for having us. This was actually a
thank you so much.
Yeah, I see that I didn't get anybody set a price at the table.
Oh yes. First of all, I didn't realize this was going to be Zoom, but that's all right.
Simone, set you up. Simone, set you up.
This is a podcast. I'm like, okay, we just have to listen. It's all right.
But you come looking at what I think.
Exactly, you look amazing. So
she just come prepared every day.
You look to listen, girl.
I'm days, okay. Yeah, it was so much fun. I really enjoyed it. Definitely would love to come back. We have more gems to drop, but you know, at the end of the day, I think if we could sum up what we do or the role of a CPA, it's really three things, you know: save you on taxes, you know, help you guys to build wealth and retain that wealth, and you know, protect your assets at the same time, right? Because you want to make sure that while you're building, you're not giving away all the way up, try to build up. So, you know, that's why we're here. So utilize us, we can be found online at www.HeinzKeyCPA. And you guys have show notes, right? Because we're
gonna put it in the notes, and we're gonna put it on Instagram and literally wherever. We're gonna put it everywhere.
CPA.
Awesome.
Y'all have
And
yes.
I can put with number too.
Yep.
We just changed our office number, but we still have the old one, 954-343-3180. So
and the IG, what's the IG handle?
Clients?
We do, and international.
Nice.
Awesome. Yeah, we do work with all.
So you all are not limited to
Florida?
No, it's a CPA. We're only not able to do audits, really, right?
Okay.
In any other states,
right?
But all other services that we provide, we're board.
So if people work summertime in Jamaica and have to file some taxes, they can call you.
Yeah, so we
not in Jamaica, but people from Jamaica that come here to work. Maybe I should make that clear. Okay.
Mm-hmm.
Okay.
Wait, non-residents can file taxes.
Yep.
Absolutely. What's that? We are gonna part two.
That's part two. Y'all have to call them or something.
No. So this is for part two.
Recommended my mom.
Yes.
This is part two. This is part two.
I just.
Yep. Right, let me know, but I must start something. Ask questions. No.
This has been amazing.
Everything has been.
So good. Thank you all so much.
Yep. I appreciate y'all. We appreciate that you came and joined us in this space. So join us for another episode. And we are glad you guys joined us and stuck around. I hope you didn't miss any of this, because trust me, if you missed any of it, you need to rewind.
No, it's not miss.
It's a Friday.
Come on,
are you taking picture?
They're
not easy.
You have to follow them on IG because
yes, we'll tag them.
Simone does. Oh yeah, we'll tag them because Simone does these gems on Tuesdays that we shared on our Insta before. You gotta follow her. Follow her. The MI.
It's the IG girl right there.
I've been on the IG post, but I will be back.
You have kids, child. That's all you gotta
say. There's enough in the vault.
That's a 6-month-old man, no?
That's right. You have kids. That's all you gotta say. That's it.
But she has enough in the vault, so just follow her and look back.
Yeah,
I agree.
I have to go find you.
Yeah, we'll tag her. We'll tag her.
Yeah, Simone.
Celia, do you IG?
What's that?
Celia?
Do you IG, Celia?
I do, not as much as I probably could, but again, well, I am the mom of an 18-year-old almost. Ooh. So that is another, another
more power to you.
Yes, ma'am. So, I don't get to do the
A girl.
And
so, not as much as I should, though.
We'll send up a little prayer for you. All right, ladies, thank you guys so much. Right now, we're going to stop the recording, but y'all can stick around. We're just going to end it. But thank you guys so much
Thank you for having us.
Yes, this was really great. Thank you for spending the time. We know you're busy.
Yeah.
Tell me when we can talk, Pato, again.